Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to do something a little bit different. I'm just going to share some open advice to all the home buyers out there here in 2021. It's a very different time for home buyers here in 2021. We've got high demand, low inventory, attractive mortgage rates, and it's sort of like this perfect storm of competition that's going on right now. And I think if you're a first-time home buyer or you're just kind of kicking the idea of moving to a bigger house, something like that, coming out of being locked up in the pandemic, I think that there's some important considerations just to keep in mind as you're going through the journey. This is not advice to should you buy or should you not buy. Everybody has their own situation. This is more or less just ideas based off my experience of I've owned two homes, bought two homes, I guess you could say. I've refinanced a couple homes. I've also sold an additional house when a family member passed away. So by all means, I am not the foremost expert, but I can tell you some things that I've seen in those transactions that I've been a part of and the things that I look for as well when considering buying a home. All right, so I think the biggest thing to lead off with in 2021 is anytime that you have a competitive market with low inventory, you as the buyer are at a pretty distinct disadvantage, right? Because it's going to be hard to make any sort of concessions when there's 100 people behind you who are willing to pay the same or more that you are. So that's okay. The key, though, is to do your due diligence. You may not be able to get, let's just say, a fresh coat of paint or certain things fixed in the house that you know are wrong, but most importantly, you need to know what's wrong. Nothing's worse than waking up to an unexpected repair, certain electrical, plumbing, roofing, HVAC. Those kind of things can set you back. You know, at the high end, they can set you back $20,000, $30,000 if things are really wrong. And if you know that in advance and you've budgeted for it and it's part of like a renovation project, then not a big deal. But I do hear stories about folks that are buying houses sort of sight unseen, not even going through the inspection process. They hear that the seller is not offering any concessions on the sale, so they're not willing to fix anything. It's sort of as is. So they don't do the home inspection. And that's a pretty crazy idea, I think, in my opinion, because you want to get in there and at least know what you're buying. There's a lot of nooks and crannies in a house. And I think inspections are running in about $300 to $400 here in Cincinnati where I live. And it's a really good peace of mind because it's very rare that an inspection comes back with absolutely everything's perfect. It just doesn't happen. Even in a new build, they're going to go through and find a couple dents and dings, if you will, that it's okay that those are there, but you need to know about them so that you don't have a surprise expense down the road. All right, I guess point number two for me right now is when you're buying at a hot market, when you're paying a premium for the house that you're getting in, you know that if you buy at the top, just like the stocks we talk about, there is a chance that the value of your home could go down slightly over the next, call it year or two, when interest rates go back up and demand gets satisfied. The simple math used to be if you buy a home, you usually need to live in it for about 5 years to fully make your money back on mortgage origination fees, moving, all the things that go into acquiring a new property. So I would say right now, if you're going to pay a premium, but you need to get into a house for whatever reason, just make sure that your next destination is a place that you're going to live for at least 5 years so that you can recoup some of those one-time costs of moving all your stuff, changing all your things, right? Paying the closing costs and whatnot that go into it. plan for 5 years, that's the kind of house you should be looking at a time when prices are high. All right, so the next point while we're talking about prices is understanding how home prices work. It's basically a demand scenario, right? Houses, just like so many other things, houses are worth what you can sell them for. And what we have right now is low interest rates. So when interest rates are very low, house prices tend to go up. The flip side of that, which we could actually see this year on a small scale, is as interest rates start to inch back up very slowly and surely, the price of the home will come down slightly because the total cost to the buyer goes up at the loan level, right? So everyone who buys a house has a budget, right? Let's just pretend that yours is $300,000 for the sake of this video. So while interest rates are low, your payment can hold more principal, I guess is one way to look at it. You can afford more house for the exact same amount of money per month. But when interest rates go up, you have to pay more interest on your mortgage so you can afford less of a house, right? And these changes that occur with interest rates are so small that you barely can tell that house prices are going down over, let's just say, a month or two, right? It just happens a little bit at a time. You know, in the $300,000 range, you might see a house get sold for maybe $10,000 less. So the key here is just understanding where you sit on a monthly budget and how that changes with interest rates. All right, now a couple buying tips that are really just my sort of qualitative data, if you will, just experience-based data. A couple things to look out for when you are on the market. Number one is understand what your tax bill is going to be in your monthly payment. So one of the biggest things that gets overlooked in a home sale is how the taxes change. If you're buying a house that the last time the house was on sale, let's just say it was 20 years ago, and the family lived there, their kids went to school, they moved out, and now the house is up for sale. In most places, including where I live in Cincinnati, the tax rate is based very closely to the last sale price, and then it goes up incrementally from there. So when you have a sale, the value of the property in the auditor's office typically resets to the new sale price and then goes up incrementally from there. So the person who lived there for 20 years, they got a base price and then they get a percentage gain each time they go up. But a sale is actually a big event for tax purposes because the county auditor can see oh, here's what this house is really worth. And right now we're in high prices. So you have to figure out what your taxes would be based on the price that you purchased the house. That will not show up in the auditor's office probably for a year after you live there. So if you live in a high tax community, I live in a high tax community because it is a smaller town with basically a private school system. It's not a huge city-based school system. So in my town, taxes are significantly higher than, probably 3 or 4 miles away from my house. That's where it's important. And what I've seen from people in my own town is they have bought properties that have either been tear downs or complete renovations, like $200,000 renovations, and they buy it based on the land value that it previously sold at 100 years ago, right? And now you have all these improvements and you bought this house for 300 times what the last person paid for that lot, and they don't see that tax bill at first because it's based on that previous sale. Then they live there for a year and the tax bill readjusts to what they paid, and it can be quite a bit of sticker shock involved with that. All right, so understanding the sort of tax appreciation is very important, and that comes into play with the next topic, which is new builds. I personally right now would not want to buy a new build home unless it was in an existing neighborhood where I could verify some track record of pricing. Guys, we have lumber prices at sort of all-time highs. You see in the news every once in a while that they expect lumber costs to increase the cost of a new build house by anywhere from like $25,000 to $35,000. That's lost money, right? Because lumber isn't gold. You're putting it in your house, you have to build your house, but lumber 2 years from now is very unlikely to be at the same price. It's going to go down. So it's not like the lumber that's in your house is going to appreciate like a stock or gold or something like that will. It's just flat out lost money. The developer obviously has to charge you because he or she is buying the lumber to build the house. But think about what goes into that. You have to pay $25,000, $35,000 more because of these lumber prices, and that's if the developer doesn't mark you up. Then you're building on a new lot that was purchased probably for $10,000 or $20,000. That's what the auditor has. Now you're building a $250,000, $300,000 house on that lot. So taxes are going to reset, and they're going to reset to a price that you paid a premium on. And the worst part of a bad new build development, right, is the fact that it just doesn't have a historical floor. So new builds are not bad houses, but they can be priced based on a demand situation. And when that demand dries up, if the schools, infrastructure, police department, if all those things kind of waver over time instead of getting better in a new community, you can really lose your shirt on the resale value of a new build home in the wrong situation. All right, last thing I'm going to share is a consideration when you're looking out at your communities that you are going to purchase your house in, right? So everybody knows the old location. You obviously want to have a strong school program for resale purposes. Even if you don't have kids, it's just a real selling point for when you want to exit. And most of the real estate apps, I know like Zillow and such, have the Great Schools Score that kind of gives you a look at the area schools and what they've graded on the Great Schools report card. It's pretty easy to find out. You can also ask folks, go to the district website, see did they win any awards. Schools will cost you more, but they are an inherent resale value trick to them. It's a feature. People will move to a house that they don't like as well as another house purely for the school district. So keep that in mind. Now, the next thing to look for, in my opinion, is owner-occupied houses, right? You want a neighborhood that is owner-occupied, primarily owner-occupied, and the higher the percentage, the better. And what owner-occupied means is it's basically folks like you and I bought the house and we live in it. We didn't buy it to rent it. We didn't build an apartment complex on the land that we purchased. We are single-family home owners. And trust me, you can go look at data. The more you get into owner-occupied, high-percentage neighborhoods, the less you see crime, the less you see saturation of services, because apartments and even senior living facilities and hospitals and such like that, they're a drag on the main resources if a city cannot afford to invest in the right infrastructure. And let's face it, most small towns and cities are really biting their nails on their budgets these days. All right, guys, so that's my free tips for looking at buying a house here in 2021. It's a very unique market. Doesn't mean you shouldn't buy a house. Just means that you have to protect yourself maybe a little extra. You have to think ahead in this market. Just like a stock that's very expensive or any other asset that's expensive for the projected returns, Just have to make sure that it's going to go in the direction of valuation that you think it's going to go, and that saves you a lot of headache down the road. Hope you guys enjoyed this. Please subscribe, give me a thumbs up. I really appreciate your help. We'll see you on the next video.